And good afternoon to all the participants. And let's begin. It's 4:15 now. I will just share my screen. Right. So today we have come to discuss a BRSR Core 2025 update, how to align with the evolving ESG regulations. Let me first set the context. So the story of BRSR started in 2021 with a SEBI circular which stated that all the top 1,000 listed companies in India will have to start reporting on their sustainability parameters using the BRSR framework. Then, the next development on this was in July 2023, when SEBI came up with another circular on BRSR Core framework, which would be used for, which is a subset of the BRSR framework and would be used for obtaining assurance, reasonable assurance for the listed entities. And the same BRSR Core framework would be used for ESG disclosures for value chain partners. The next development in this area came in December 2024 when the Industry Standards Forum, consisting of the CII, FICCI, and ASSOCHAM, came up with industry standards. Basically, the industry standards resolved many of the pain points which was forwarded by the industry in making the BRSR report. The next and the latest development came in March 2025, where SEBI came up with a circular for measures to facilitate ease of doing business. Now, what this circular did is it relaxed some of the regulations with respect to BRSR. We'll see in the subsequent slides how it goes about. Right. First, the structure of BRSR Core. As I said, BRSR Core is a subset of the BRSR framework. It has got the most important 9 KPIs of the BRSR framework, 4 of which relate to environment, 3 of which relate to social, and 2 of which relate to the governance aspects. Coming to the environment aspects, talks about greenhouse gas footprint, water footprint, energy footprint, the waste management practices of the organization. The social aspect considers disclosures about the employee well-being and safety, gender diversity in business, and how is the business bringing about inclusive development. The governance aspect caters to the fairness in engagement with customers and suppliers, and how open is the business in its operations. In the subsequent slides, we will discuss each of these. But first, let us talk about the applicability of BRSR Core and how the ease of doing business circular has changed the applicability. So, as we know, the top 1,000 listed entities need to use the BRSR Core for their assessment or assurance. Now, this BRSR Core framework is applicable for the top 500 listed entities in the financial year 25-26, which is the current financial year. Now, I'll take some time to discuss about assessment. What is assessment? Assessment is, you can say, if we put it in an order, reasonable assessment, reasonable assurance, limited assurance, and assessment. So what SEBI wants is a validation of all the sustainability related information which is put out in the BRSR framework, the report. It does not want an international standard of assurance like ISA 5000, ISA 3000 for a BRSR validation. Why? Because assessment would be cost effective and less burdensome. So what will govern the assessment? Assessment will be based on the assessment standards, which are yet to be notified by the Industry Standards Forum. So the Industry Standards Forum will come up with assessment standards, and on the basis of that, assessments can be done for BRSR, for the BRSR Core KPIs. Now, the applicability on value chain. This circular on ease of doing business also changed the applicability on value chain. Earlier, all the value chain partners, up to 75% of the purchases and sales, were included in the BRSR core framework. But now it has been changed. Let us take an example and understand. Let's say ITC is a listed company. What ITC will do is it will list out its purchases in terms of its suppliers, and it will go up to 75% of its purchases. Then it will arrange them in descending order. So the value chain partners or the suppliers who have maximum transactions with ITC would be put on top, and subsequently it will be on the basis of rank. Now there is a threshold of 2%. So all the value chain partners whose individual transactions with ITC are above this threshold, in this particular case, the first three value chain partners, will have to supply or give their BRSR core framework KPIs to ITC to be reported in their annual report. That is ITC's annual report. Similarly, on the sales side, up to 75% of the sales, the customers will be linked, the value chain partners, that is the dealers, distributors, etc. And a 2% threshold will be applied. And all the value chain partners who cross a 2% threshold will have to provide their BRSR core KPIs to ITC for reporting. So again, I repeat, value chain disclosures will be a part of the annual report of the listed entities. Now, this circular has also revised the glide path. Earlier, this value chain scope was supposed to start from 24-25 financial year. But the same has been shifted to 25-26. And the mandatory nature of such disclosures has been made voluntary. So it is voluntary for ITC to disclose the BRSR core KPIs for its value chain partners now. Now, the second part is assessment. The assessment of the value chain data was supposed to begin from financial year 25-26, which will now start from financial year 26-27. This has also been pushed back by another year. So that is about the applicability of BRSR core as it stands today. Now let's talk about the structure of BRSR core one by one. So the first KPI is greenhouse gas footprint. Greenhouse gas footprint consists of scope 1 emissions, scope 2 emissions, and GHG emission intensity. Now this word intensity, you will find it in a lot of places. In fact, all the environment-based KPIs. Yeah, we'll talk about it in great details. But let's talk about first scope 1 emissions and scope 2 emissions. BRSR core suggests the use of GHG protocol corporate standard for calculating the scope 1 emissions and scope 2 emissions. Let's take a sneak peek into what is GHG protocol corporate standard. Now, right from the basics, we'll discuss this standard. So there are 7 greenhouse gases. What these greenhouse gases do, they form a layer over the Earth's atmosphere and trap the heat, which is generally to be radiated in the outer space. By trapping the heat, they're causing the Earth to warm, which is known as global warming, a term which you must have heard, which is causing a lot of distress all over the world, like the recent floods in Gangotri. Now, out of these 7 greenhouse gases, carbon dioxide is the most prominent greenhouse gas, right? Now, suppose a company has to start its greenhouse gas accounting. How will it do it? It will first make a boundary called an organizational boundary, and it will identify all the sources of greenhouse gas emissions within this boundary. It could be stationary emissions, which could be a boiler or a furnace inside the plant. It could be mobile emissions, which is the fleet of trucks or cars which the company owns. It could be process emissions, like certain operations like aluminum smelting, semiconductor manufacturing actually release greenhouse gases during the manufacturing process itself. and fugitive emissions, which are unintentional but happen because of leakage or something else. Now, it will calculate and aggregate all these emissions from the sources which it owns or controls. Ownership and control. These are the two important points. Now, so all these emissions will come under scope 1. Now, there is a second type of emission, which is indirect emission. All the companies need electricity. We'll talk from the Indian perspective. All the companies need electricity to run their operations. Now, the consumption of electricity by the company is happening from the grid, electricity grid. Now, what is feeding power or electricity to the grid? The power plants. Now, in India, even today, 55% of the power plants are thermal, or that is based on coal or natural gas or diesel. So when we burn coal, natural gas or diesel, what comes out is greenhouse gases. So the consumption of electricity by the company is indirectly causing emission of greenhouse gases in the power plant. So the emissions due to the consumption of electricity comes as an indirect emission under scope 2. Of course, the company can also draw some power from renewable energy. Then in that case, the emissions would be 0. But if it is drawing from a grid, which is the Indian grid, then there will be some emissions which will be reported under scope 2. There is another indirect source called scope 3, which I'm not getting into right now, which is because it is not relevant for BRSR Core. Now, there are two things which is required for calculation of emissions. One, the quantity of fuel consumed or the quantity of electricity consumed, that is quantity data. And two, emission factors. So suppose I'm using coal, then what is the emission factor of coal? What is the emission factor? If I burn 1 metric ton of coal, how much of carbon dioxide or other greenhouse gases will be emitted? So these are the two things. One is quantity and the emission factor data. Now let's say BRSR Core will be applicable for many companies in 25-26 who will be doing it for the first time, because the value chain partner reporting starts from 25-26. Now, we cannot expect all the companies to have quantity level data for all the cases. So in that case, how to manage, how to report greenhouse gas emissions? Now, the industry standard note gives a path which is called the spend-based method for GHG accounting. What is this? That is conversion of expenditure which is booked in the profit and loss account into greenhouse gas emissions. How to do it? Let us see step by step. So there is an expenditure in the profit and loss account. This is an audited figure, so we can rely upon it. This will be converted into quantity data using a public pricing information which is available. We'll come to it. Then we'll apply the appropriate emission factors on this quantity data. We will be doing it for each and every expenditure category. And then we'll be aggregating the emissions from all the relevant categories. That will give us the greenhouse gas footprint, I would say, for the company. So to summarize, greenhouse gas emissions is equal to the spend data booked in the P&L divided by the price factor into the emission factor. Let us take an example to understand. For the financial year 24-25, if a company has spent around 1 crore rupees on LPG and the price per ton of LPG was rupees 96,000, then the quantity of LPG consumed will be roughly 111 tons. The emission factor of LPG is 2.98 tons of carbon dioxide equivalent per ton of LPG consumed. So when we burn 1 ton of LPG, 2.98 tons of carbon dioxide equivalent is generated. So what is carbon dioxide equivalent? The greenhouse gases, all greenhouse gases emitted are to be reported in terms of tons of carbon dioxide equivalent. So if a methane has been emitted, then it has to be converted into carbon dioxide equivalent based on its global warming potential. I will not get into the details. For now, the emissions to be reported will be 111 tons into 2.98, which is 331 tons of carbon dioxide equivalent. So the expenditure booked in the P&L converted into emissions. Similarly, if the spend on electricity was around 5 lakh rupees and the average price of a commercial connection for that particular company size would be 9.13 per kilowatt hour, then the quantity of electricity consumed will be 58.328 megawatt. I've converted it into megawatt. The emission factor for 24-25 is 0.2727 tons of carbon dioxide equivalent per megawatt hour. So the emissions would be 58 into 0.727, which is roughly 42 tons of carbon dioxide equivalent. Now, couple of points for this. Where am I getting these emission factors from? These emission factors have been given in the industry standard note. But what the industry standard note says is, if we have got a better source of emission factor, an updated source, then we should use that. What could be the other sources? The greenhouse gas protocol emission toolkit is a good source. IPCC is another good source. UK DEFRA and US EPA may also be used, but IPCC and the greenhouse gas protocol is the go-to source for emission factors. The second point is, this is only a last resort, spend-based methodology. The greenhouse gas protocol does not prescribe spend-based methodology for scope 1 and scope 2 emissions. But it is an industry standard note which is giving spend-based methodology for scope 1 and scope 2 emissions also. So once the organization starts calculating its quantities or aggregating its quantity, it cannot go back to spend-based methodology. Now we'll come to intensity calculations. So we had seen here all the environmental parameters had to have intensity disclosures. What are these intensities? The first intensities is intensity per rupee of turnover. Yeah. Intensity per $1 million of turnover using purchasing power parity exchange rate, and intensity in terms of physical output. We'll discuss about these two. This is a direct, rupee of turnover is a direct take from P&L, the revenue from operations in rupees crores. What is purchasing power parity based exchange rate? So a US dollar converted into, an Indian rupee converted into US dollars, not at the prevailing exchange rate or any other exchange rate, but a purchasing power adjusted exchange rate whose sole source should be IMF. This side of IMF, which clearly says India has a PPP based exchange rate of 20.66, should be used. This PPP based exchange rate, as we can see, is much different from the prevailing exchange rate of almost 88 now, because it takes into consideration the general costs and living standards of the countries. So this is the rate to be used for this intensity. Now we come to physical output. Physical output for a company like Tata Steel is very easy because they have tons of crude steel available with them. And what about a service-based company like a bank or something? In such cases, what the industry standard note has suggested is the use of full-time equivalent employees for reporting the intensity. What is full-time equivalent employees? Let's see with an example how to calculate full-time equivalent employees. Let's say the standard working hours of a full-time employee in a company for 52 weeks is 40 hours per week. So it is 2080 hours. There will be a leave adjustment. There will be a leave adjustment, assuming that there are 10 holidays and 12 paid leaves. That comes to 176 hours. That is 8 hours on a daily basis. So the annual standard hours for one full-time employee would be 2080 minus 176, which is 1904 hours. Now, let's say there are 30 full-time and 20 part-time employees who work for 57,120 and 25,000 hours respectively. We'll have to aggregate the hours for each of these employees, and then we have come to this particular figure. So the total hours worked would be around 82,000. So the full-time employees would be the total hours, that is 82,000, divided by the standard annual hours of one full-time employee, which is 1904, which comes to 43.13 full-time equivalent employees. So that is how this particular parameter will be reported for service sectors. Moving on, the next environmental parameter is water footprint, where water consumption has to be reported, water consumption intensity has to be reported, and water discharge has to be reported. I will not discuss intensities anymore because it is the same thing for all the environment-based KPIs. So let's see how water is accounted for. So water is present in the nature in the form of surface, underground, municipal water, sea water, and other areas from where a company can draw water from. It's called water withdrawal. So when the company draws water, it goes through an inlet meter. Then the water is consumed in the company in its operations, that is in the production process, in the canteens, in the housekeeping, in the firefighting, etc. Then the water is treated, that is primary treatment, removal of floating solids, secondary treatment, removal of dissolved solids, tertiary treatment, which is the highest level of treatment where we actually disinfect the water. Then the water is again recycled back for operations, or in some cases it is discharged back to the nature through a outlet meter. Now it is very difficult to estimate what is the amount of water consumed. So there is a formula for it. The formula for water consumed will be the water withdrawn from the ecosystem minus the water which is discharged back into the ecosystem will give us the water consumed. That is what has to be reported. Now, this is okay for an industrial setup where there are water meters. What about a sales office or a branch office somewhere in India where there is no water meter? Then we will take the help of Central Groundwater Authority guidelines, which says that the estimated consumption per head per working day for offices is 45 liters. This includes drinking, flushing, everything. It's a very interesting document. So considering this 45 liters, this has been given by the industry standard note. So the water consumption for such offices, branch offices, will be calculated by this formula, which is number of employees. I'm not able to see this pointer. Okay. Number of employees and workers into the number of working days into 45 liters. That is how the consumption has to be estimated for such offices. And suppose the office is somewhere in a complex where one building does not have a water meter, but the entire complex has one. So as expected, the water consumption for this particular office would be proportionately done based on the area it occupies. This is the formula. Now, energy footprint, wherein the companies have to disclose the amount of energy consumed, the percentage of energy from renewable sources, and energy intensity. There are two main sources of energy. One is fuels, the other is electricity. What are the non-renewable sources of fuels? Coal, LPG, natural gas, diesel, others. What are the renewable sources? Biofuels and hydrogen. Energy in gigajoules. So energy is something which has to be measured in terms of gigajoules, joules or higher unit, which is gigajoules or terajoules or petajoules. So I'll give you just an example. Gigajoules, energy in gigajoules would be consumption quantity. See, again, here we require consumption quantity of the fuel into the net calorific value for the fuel in gigajoules. Just like the estimate factor earlier, we need to have the net calorific value in gigajoules for the fuel. Taking an example, quantity of LPG consumed is 3000 metric tons. The net calorific value for LPG is 46.1. So the energy consumed would be 46.1 into 3000, which is around 138,000 gigajoules or 138 terajoules. Similarly, for electricity, the non-renewable sources of electricity, basically the thermal power plants, would be the coal, diesel, natural gas, and the renewable sources would be solar, hydro, wind, and nuclear. Again, energy in gigajoules would be the consumption in megawatt hour, again quantity required here, into 3.6. This is a standard formula. So the quantity in electricity consumed is 3000 megawatt, let's say, out of which renewable sources in megawatt is 300. So the energy consumed would be 10,800 gigajoules, and the percentage from renewable sources would be 10%, which is what has to be reported here. Percentage from renewable sources. So that was about energy. Coming to waste management. Now this is going to be a hard nut to crack. So there are 8 kinds of waste which has been prescribed by the BRSR Core, which comes from the Pollution Control Board norms, obviously. So there are 8 kinds of waste against which the entity has to report the amount of waste generated from operations. Mind you, this waste is different from the post-consumer waste. That is, you use a shampoo bottle and throw it in the dustbin. That is post-consumer waste. That waste does not come here. That waste comes in Principle 2 disclosure. The waste, what we're talking about is the waste generated in the manufacturing of this shampoo bottle. So that waste intensity, that is waste generated by the revenue in rupees, the revenue in US dollars, and revenue for physical quantity, waste recycled and waste disposed. The waste recycled and waste disposed has to be given, the quantity has to be given for each of these 8 waste categories. How does it happen? Okay, listen to it as a story. Now, the company has operations. So it generates process waste during its operations. A lot of it, like let's say a steel company, a lot of it goes to an internal recycling facility for company operations like melting or other operations. Now there are certain other kinds of waste, which are plastic waste, e-waste, which has got no use for the company. What happens with these? They are collected and segregated. Collected at one place and segregated. Segregated into what? Segregated into recyclable waste and unrecyclable waste. Now the recyclable waste is sent to the authorized waste recyclers. Authorized by whom? Authorized by the State Pollution Control Board. And the unrecyclable waste is sent to the authorized end-of-life processors, authorized again by the State Pollution Control Board. Now both of these process the waste either by recycling it or by end of life, that is incineration, or putting it in the landfill, or making roads out of it, or cement clinker manufacturing for cement. So what these authorized waste recyclers and end life processors do is they generate certificates which will be given to the company, which can be shown that the company has recycled and disposed of this much quantity of waste under each category. Now there are specialized organizations called Producers Responsibility Organization, or PROs, who help the organizations in this aspect, the dotted line, which is collection, segregation, liaisoning with the authorized recyclers and the end-of-life processors. Some of the examples could be Recycle and Banyan Nation. Now these PROs also manage the pollution control regulations, compliance, reporting, and the documentation for the company. It is catching up in India. It is much prevalent in the West as of now. Now, we have completed the environmental KPIs and we are 30 minutes into the presentation, which is good. Now we have 3 social factors which need to be reported, which is not very technical like the environmental cases. So this should be easier for us to understand. So the first KPI is spending on well-being measures as a percentage of revenue. So what is spending on well-being measures? There was a lot of diversion in the figures reported for the financial year 23-24. Now the Industry Standard Forum has come up with a specific definition of what is spending on well-being measures. And the second point is safety-related incidents, fatalities, and permanent disabilities. Let's see. So regarding the well-being, expenditure on well-being. So only these expenditures, specific expenditures, should be taken into account. What are they? The expenditure on health insurance. The expenditure on health insurance, accident insurance, and daycare facilities. Cost of maternity and paternity benefits, which is direct benefits to any pregnant woman. That is, a cab is provided for dropping at home and picking up, or an actual salary paid to the employees during their parental leave, either to men or women. That is also there. And the costs incurred by the employee in health and safety measures, which is medical benefits provided, health checkup camps, eye treatment camps, counselors, clinics, fitness programs, company pays for the employees' fitness program registrations. Mind you, it also includes mental health, not just physical health. So expenditure on these 3 heads should only be considered for this. That is a big clarity which has been brought out. Second is safety related incidents. There is a metric called lost time injury frequency rate, which is used to measure the workplace safety. This has to be maintained by the safety officer of the company. So basically the absenteeism of an employee because of an accident at workplace has to be recorded now. So the total number of lost time injuries in hours into 1 million divided by the total number of working hours for all the employees. That is a metric which is to be used. So obviously LTIFR for a high risk industry like a steel plant or a mining or oil and gas would be higher than a low risk industry like a bank or a stockbroker. Then again, the number of permanent disabilities and the number of fatalities, this I think the companies would keep record, or the factory inspector also. This has to be maintained and reported under this parameter. I'll just... Gender diversity in business. How well are we taking care of our women who are working for us? So wages paid to the female employees as a percentage of total wages paid to all the employees, and disclosures regarding complaints on Prevention of Sexual Harassment, Prevention, Prohibition and Redressal Act 2013, or basically known as the POSH Act. Now, what the industry standard note has done is it has defined what is wages. The earlier BRSR, the guidance had given this should be included, this should be included, this should be included, which obviously creates confusion. Now, what it has done, it has sort of created a negative list. So definition of wages would be the amount which has been booked under the employee benefits expense in the P&L and exclude the retirement benefits, the ESOPs, and the staff welfare expenses. That is what has to be reported, which is much simpler. And for other than permanent employees, that is women working on contract, etc., the actual wages paid to the non-permanent employees or workers. That is what has to be reported. Again, what has to be reported is the number of complaints which has been received under the POSH as a percentage of the number of female employees. So the confusion was number of female employees during the beginning of the year or the end of the year, what? So the industry standard note says it will be the average of the number of female employees. Again, there still lies a confusion that whether it should be only permanent employees or other than permanent employees should be included. This note does not say, but the POSH Act says that any woman who is working in the industry, in the company, comes under the POSH Act. So obviously it should include both permanent as well as non-permanent employees. I mean, female employees. Now, out of the complaints made under the POSH Act, how many complaints were upheld? That data has to be reported. Now, what is meant by upheld? So when a company implements a POSH Act in its, is implemented, then it forms an internal committee which will scrutinize each and every complaint made under the POSH Act. So it will collect evidence, the video evidence, and it will collect witnesses, etc., before coming to a conclusion. So in such cases where the inquiry report has arrived at the conclusion that the allegation on such and such person has been proved, there is enough evidence to state that he has done sexual harassment, then such cases has to be noted and reported here. That is what is the clarity which has come. The allegation must be proved. Coming to inclusive development, purchases from MSMEs, small producers, and within India as a percentage of total purchases. So within India as a within India should not be a problem. You know the site of all the suppliers. So that as a percentage of total purchases is not a problem. What are small producers? But before that, what is meant by total purchases? The definition of purchase is important here. Input material or total purchases shall include all types of procurement, including raw materials, spares, services, capex also is to be included. And also all forms of services which have been procured from any third party. So that is the first clarity. It includes all kinds of purchases. Right? Now, what is small producer? Small producer means an informal producer or a self-help group, working from home-based workers, who produce some quantity to the company of gift items, etc. Cooperatives, producer companies like Lepakshi, So how much has been procured from them and how much has been procured from MSMEs? So that should be readily available. If the supplier submits an MSME certificate, he is an MSME, and the definition of MSME has been changed from 1st of April 2025. So, but that is not relevant. The supplier has to give us a certificate for MSME. The second is the amount of job creation in smaller towns, which will be reflected by the amount of wages paid in smaller towns as a percentage of total wages paid all over India. Now, what is wages here? Wages here means total wages, which is, employee base expense minus, your retirement, ESOP, etc., plus contractual payments for labor in a specified location, divided by the total wages plus contractual payments for all locations within India. Now, what is specified location? How do you identify what is a small town? What is the basis? The basis is the RBI classification. The RBI classification says that any location having a population of less than 10 lakh will be rural, less than 10,000 would be rural, and more than 10 lakh would be metropolitan. And there are other categories like semi-urban and urban. This seems awkward because it is based on 2011 census and has not been updated. So there could be some challenge here in finding out whether the location is, semi-urban, urban, or metropolitan. And mind you, here, the location of the job is more important and not the location of the employee. It does not mean that I have recruited from a place called, Raigada in Orissa and put him in Mumbai. No, the job should be in Raigada. That is what is important. Next is fairness engagement with customers and suppliers. The second point is number of days of accounts payable, which is, accounts payable connected to the goods of cost of goods sold and reflected in number of days. We have been doing it in our financial statements. But again, here, the catch is the definition of purchases. The definition of purchases here would be the same as used here in the inclusive development KPI. Next, instances of customer data breaches as a percentage of total data breaches. What is a data breach? Basically, a data breach is a cybersecurity incident, a ransomware or a malware attack, which has to be first. There are two requirements. A, which has to be reported to an organization called CERT-IN and should involve compromise of the personally identifiable information of the customers. These are the two requirements. What is CERT-IN? CERT-IN is a national nodal agency for responding to cybersecurity incidents as and when they occur. So any cybersecurity attack has to be reported, and if it is found that the personally identifiable information of customers has been compromised, then the same has to be reported here. What is personally identifiable information? Passwords, the health records, the sexual orientation, financial information, biometric data, etc. This is what has been defined as personal information. The last one, openness of business. How open is the business in its transactions? So concentration of purchases and sales with trading houses, dealers, and related parties. And the share of related party transactions in purchases, sales, loans and advances given, and investments made. So purchases from trading houses as a percentage of total purchases. Again, the purchase definition is including capex. So trading houses is defined as, legal entities involved in export, import, domestic trade of goods and services. So the challenge here is all your suppliers have to be identified whether or not they form this definition of trading house. The categories have to be made. Then once it has been done, the number of trading houses where the purchases are made from, the number, how many trading houses are you involved with? That has to be reported. And the percentage of purchases from the top 10 trading houses as a percentage of all trading houses. So how much concentrated is your purchases from the trading houses? So if you're making your entire 90% of your purchases from 3 trading houses, it means it's highly concentrated and it is not very open. Similarly, for sales side, how many dealers or distributors are you dealing with? Then, and the percentage of sales to the top 10 dealers compared to the total sales to all the dealers and distributors. That has to be reported. Related party transactions. Now, SEBI had, was looking at related party transactions of the listed entities with a magnifying glass. Now, the related party transactions of the value chain partners of listed entities will also be scrutinized. So the purchases with related parties transactions as a percentage of total purchases, sales to related parties as a percentage of total sales, loans and advances standing in the books of accounts given to related parties as a percentage of total loans and advances, and investments made in related parties as a percentage of total investments, which is lying in the books of accounts as of the last year of the financial year. Who is the related party? It is as per regulation 2 of the LODR regulation. The same thing applies here also. Now, I think we have come to the end of disclosure, the theory part. Now, what about the practicality? So there will be many companies who would be starting their, the BRSR Core framework reporting journey in 2025-26. So what is it that they need to gear up for? Number one, gain the understanding of JG protocol. It's a beautiful standard. List the purchases according to suppliers and categorize them under trading houses, related parties, MSMEs, small producers. All the suppliers have to have these categories. List the sales for dealers, distributors, etc. Implement the POSH Act in your organization. Create a policy and procedures. Track the injury-related absenteeism for LTIFR data. Prepare the employee data according to the gender. Obviously, that is there. Wages paid with the industry standard definition and location of the job. This is very important. Develop internal procedures for collecting quantity data, that is fuel consumed, quantity of electricity consumed, quantity of water consumed, etc. Liaisoning with waste recyclers and end-of-life processors to get the waste generated data. The best is to appoint a PRO and implement a cybersecurity policy and report any cybersecurity attack to certain first as per the guidelines. Start doing this. So this is the gearing up which is required. So it is 46 minutes. I am done with my presentation, but I have a small quiz which all of us will take. There are only 6 multiple choice questions based on whatever we have discussed in the last 45 minutes. I'll give you 1 minute to answer the questions. Take out a piece of paper and scribble down the options, or you can use a notepad, anything. So I hope I cannot see you. So I hope you're ready for the quiz. This is the quiz and your time starts now. I hope the running. Sorry. Hello, Atishay.
Yes, sir.
I am not able to see the clock, so you have to tell me when the 1 minute is over.
Oh, okay. Yeah. Time stops now.
Right. So value chain partners of top 250 listed entities shall report on the BRSR Core KPIs in their annual reports from financial year 25-26. It is false. The reporting will not be done by the value chain partners in their annual reports. It will be done by the listed entities in their annual reports. Which one of these should be the source of purchasing power parity adjusted exchange rate, IMF? Wages of daycare staff should be a part of staff welfare measures. Yes, because it is a part of the maintenance of daycare facilities, which is a part of the spending measures. A Limited has 90% of its purchases from top 10 traders. B Limited has 43%. Which one is more open? Obviously, B Limited is more open because it is more inclusive, to its suppliers. Now, this is an interesting question. A Limited sources 1,000 kilowatts of electricity from captive coal-based power plant. Emission rate is 0.727. What is the emission to be reported under scope 2? The answer is 0, because it is a captive coal power plant, and so the emission would be reported under scope 1. Ease of doing business circulars mandates the assessment of BRSR core KPIs. No, it does not. Entities may opt for assurance to meet other stakeholder requirements. Thank you. Thank you if you've taken the quiz.
Thank you, Pawan sir. I think there are some queries from some of our participants as well. I'm sure that you would like to take them up. So, sir, one question is from Patna. What is the principle 4 of BRSR?
Principle 4 of BRSR is about, the stakeholder engagement, how the companies engage with the stakeholders. That is, how regularly do they do it, and in what manner do they do it? Emails or meetings. That is what is about stakeholder. But that does not form part of the BRSR core.
Okay. And there is one more question which has been asked by C. Abhimanyu. So, sir, please tell us whether all top 1,000 listed entities need to report KPI of BRSR core of all its suppliers and customers in its annual report of 25-26, or whether it is mandatory reporting BRSR core parameters of customers and suppliers in year 24-25.
No. The ease of doing measures has shifted the compliance to 25-26, and only the top 250 companies will be doing it in 25-26. So it is a glide path. So 500 in 26-27 and 1,000 in 28-29.
Okay. That's all from my side, sir. It was a pleasure having you on board, and it was a really informative session on BRSR. And anything else? If
Yeah. Okay. Thank you so much.
Thank you, sir.